A digital revolution underway. The global financial landscape and technological infrastructure are undergoing one of the most disruptive transformations of our era. At the heart of this revolution are two interconnected and powerful concepts: cryptocurrencies and blockchain technology. Far from being mere fleeting trends or internet jargon, these innovations promise to fundamentally redefine how value and information are created, transferred, and stored in the digital world. Cryptocurrencies, led by the pioneer Bitcoin, have emerged as a decentralized alternative to traditional fiat currencies, challenging the control of centralized financial institutions. Behind them, blockchain, a distributed ledger technology, offers an unprecedented level of security, transparency, and immutability for a wide range of applications that extend far beyond digital money. This script will explore the fundamentals of these technologies, their architecture, their diverse applications already reshaping industries, the challenges and risks associated with their adoption, and the vast potential they hold for the future of the digital economy and society. Prepare to uncover the secrets of decentralization and trust in the 21st century. Understanding cryptocurrencies. Decentralized digital money. Cryptocurrencies are digital or virtual currencies that use cryptography to secure transactions and verify the transfer of assets, as well as to control the creation of new units. Their most distinctive feature is decentralization. Unlike traditional currencies, like the real or the dollar, which are issued and regulated by central banks and governments, cryptocurrencies operate on distributed networks, typically based on blockchain technology. This means there is no central authority that controls them. The security and integrity of transactions are maintained through advanced cryptographic techniques. Each transaction is digitally signed and added to a block of data, which is then validated by network participants, miners, or validators before being permanently recorded on the blockchain. Cryptocurrencies offer several potential advantages. Decentralization. They do not depend on banks or governments, which can increase privacy and resistance to censorship. Transparency. All transactions are public and verifiable on the blockchain, although user identity is pseudonymous. Security. Cryptography and the distributed nature of the blockchain make transactions and records extremely secure and difficult to tamper with. Speed and lower costs. In some cases, transactions can be faster and have lower fees than traditional banking systems, especially for international transfers. There are thousands of cryptocurrencies, each with its own characteristics and purposes. Bitcoin, BTC, is the original and most well-known cryptocurrency, created in 2009 by a pseudonymous entity or group called Satoshi Nakamoto. Other popular cryptocurrencies include Ethereum, ETH, which introduced smart contract functionality, Ripple, XRP, and many others, each with its own community and ecosystem. Blockchain technology. The distributed and immutable ledger. At the heart of cryptocurrencies and many other digital innovations is blockchain technology. In essence, blockchain is a type of distributed ledger technology, DLT. Think of it as a digital record of transactions or data that is maintained and updated by a network of computers, nodes, rather than a single central authority. Blockchain is composed of a chain of data, blocks. Each block contains a set of transactions or other data and a cryptographic hash of the previous block, forming a link that connects the blocks in a chronological sequence. Key characteristics of blockchain include decentralization. There is no central server. The network is maintained by multiple participants, nodes. Immutability. Once a block is added to the chain, it is extremely difficult, practically impossible, to alter it without the alteration being detected by the entire network. This is because altering one block would require altering all subsequent blocks and the approval of the majority of the network. Transparency. All transactions and data recorded on the blockchain are visible to all network participants in public blockchains. Cryptographic security. End-to-end encryption and hashes ensure data integrity and authenticity. Consensus. The network uses a consensus mechanism, such as proof of work, POW, or proof of stake, POS, to validate transactions and add new blocks to the chain, ensuring that all nodes agree on the state of the ledger. Blockchain can be public, open to anyone to participate and verify transactions, like Bitcoin and Ethereum, or private, permissioned, access and participation are restricted and controlled, common in enterprise applications. Applications beyond money. The blockchain revolution. Blockchain technology, though born with cryptocurrencies, has transformative potential that extends far beyond the financial sector, promising to revolutionize various industries. Decentralized finance, DeFi, an ecosystem of financial applications built on blockchains, primarily Ethereum, that aim to recreate traditional financial services, lending, insurance, trading, in a decentralized manner without intermediaries. Smart contracts. These are self-executing contracts with the terms of the agreement directly written into code. Once predefined conditions are met, the contract automatically and immutably executes, without the need for an intermediary. They have applications in law, logistics, and more. Supply chain management. Blockchain can provide a transparent and immutable record of a product's entire life cycle, from raw material origin to the end consumer. This improves traceability, authenticity, and reduces fraud. Electronic voting. Blockchain technology can be used to create more secure, transparent, and fraud-resistant voting systems, ensuring ballot integrity and auditability. Digital identity. Blockchain can allow individuals to control their own digital identity, with personal data stored securely and accessible only with the owner's permission, reducing reliance on centralized authorities. Copyright and intellectual property. Artists and creators can register their works on the blockchain, creating an immutable record of authorship and creation date, protecting copyrights and facilitating monetization. Data marketplace and privacy. Blockchain can create marketplaces where individuals control and monetize their own data, with privacy guaranteed by encryption and access control. NFTs, non-fungible tokens, represent unique digital ownership of assets like art, collectibles, music, and in-game items. Blockchain guarantees authenticity and ownership, creating new digital markets. Challenges and risks. The dark side of innovation. Despite their vast potential, cryptocurrencies and blockchain face significant challenges and present risks that need to be carefully considered. Volatility. The value of cryptocurrencies is notoriously volatile, with rapid and unpredictable price fluctuations that can lead to substantial financial losses for investors. Regulation. The lack of clear and harmonized global regulation creates uncertainty and can hinder large-scale adoption. Different countries have varied approaches, from prohibition to encouragement. Cybersecurity, wallets, and exchanges. While blockchain itself is secure, the platforms and wallets where cryptocurrencies are stored and traded can be targets for cyber attacks, resulting in theft. Energy consumption. Proof of work. The proof of work, POW, consensus mechanism used by cryptocurrencies like Bitcoin consumes a significant amount of energy, raising environmental concerns. New approaches, such as proof of stake, POS, aim to address this. Scalability. Many popular blockchains face scalability challenges, meaning the ability to process a large volume of transactions per second, which can lead to slowness and high fees during peak demand. Mass adoption. Technical complexity, unfriendly user interfaces, and a lack of public understanding are still barriers to the widespread adoption of cryptocurrencies and blockchain. Illicit uses. The pseudonymous nature of transactions on some blockchains can facilitate illicit activities, such as money laundering and terrorist financing, although the inherent transparency of blockchain also aids in traceability. Speculative bubbles. The cryptocurrency market has been prone to speculative bubbles driven by fear of missing out, FOMO, and exaggerated narratives, leading to abrupt drops in value. The decentralized future. Potential and visions. Despite the challenges, the development and adoption trajectory of cryptocurrencies and blockchain technology point towards an increasingly decentralized and interconnected future. Web 3. The concept of Web 3, or the next generation of the Internet, is intrinsically linked to blockchain. It aims to create a more decentralized Internet, based on open protocols and user ownership, where data is not controlled by a few giant corporations. Central bank digital currencies, CBDCs. Many central banks are exploring the creation of their own digital currencies, CBDCs, which would combine the innovation of digital technology with the stability and trust of a fiat currency issued by a central bank. Institutional adoption. The growing interest from large financial institutions, technology companies, and governments indicates greater legitimization and integration of cryptocurrencies and blockchain into existing economic systems. Tokenization of real assets. The ability to represent real-world assets, real estate, stocks, works of art, as tokens on the blockchain can democratize access to investments and increase the liquidity of traditional markets. Continuous innovation, research and development in next-generation blockchain technologies, more efficient consensus mechanisms, scalability solutions, Layer 2, and more user-friendly interfaces promise to overcome many current challenges. Social impact. Blockchain has the potential to empower individuals, especially in regions with less developed financial systems, offering access to financial services, digital identity, and ownership more securely and accessibly. Conclusion: navigating the era of decentralization. Cryptocurrencies and blockchain technology represent much more than a financial innovation. They symbolize a paradigm shift in how we think about trust, authority, and ownership in the digital world. They offer the promise of more transparent, secure, and efficient systems with the potential to redistribute power and value creation. However, like any revolutionary technology, they bring with them complex challenges, from volatility and regulation to security and environmental impact. Navigating this new era will require collaboration among innovators, regulators, and the public to build a digital future that is equitable, sustainable, and accessible to all. The journey to digital decentralization is just beginning. Understanding its principles, applications, and challenges is crucial for anyone who wishes to participate in and shape the future of the economy and society in an increasingly interconnected and data-driven world. The promise is of a future where trust is no longer placed in intermediaries, but in mathematics and code.